Morning, guys. It's Wednesday, September 10th, 5:24 a.m. Central Time. Grain market's a little bit lower this morning. December corn futures down 2.25 at 417.5. November soybeans down 4.25 at 1027. December Chicago wheat down 3/4 of a cent at 519.5. December Kansas City wheat down a half cent at 509.75. December spring wheat down 1 3/4 at 572.25. I'm not thrilled about it, but we're going to start with another farm economy piece here this morning.
So, AgWeb published an article on Tuesday discussing high input costs and low commodity prices. Farmers across the nation are facing what they describe as the worst agricultural economy in decades, as collapsing margins threaten family operations. At a September 2nd meeting in Arkansas, more than 400 farmers voiced frustration with bailouts they view as ineffective and tilted toward lenders, suppliers, and corporate agribusiness. Many farmers argue that monopolistic control of seed, fertilizer, and chemical markets traps them, allowing corporations to capture profits while they absorb the losses. Bankruptcy risks are rising sharply, with forecasts of 25 to 40% of farms in some regions facing failure. Farm leaders are calling for reforms such as antitrust action, a freeze on mergers, tighter lobbying rules, and greater market diversification to safeguard U.S. food security.
This was printed in AgWeb, which is owned by Farm Journal, and props to them for printing it because they are very heavily corporate sponsored. They're sponsored by big fertilizer companies. The article stops short of naming any of the companies that are being discussed here, but I'm kind of surprised that this was actually printed. One farmer from Arkansas here, his name's Adam Chappell, I think, 46 years old, says, "This is the worst ag economy of my lifetime. Year after year, sweeping all this under the rug and pretending it's not happening has got us to this point. Years of barely squeaking by, surviving with a bailout, then doing it all again. That is the definition of insanity." He accuses USDA of whitewashing the farm economy. "I'm sick of USDA graphs saying agriculture income is set to rise. They're baking cattle and payments into their recipe and pretending things are good." This is the graphic I believe that he is referring to. This was from USDA's farm income forecast that was out earlier this month. And you can see by looking at this, there's no problem here, right? That's what this graphic would illustrate to me. The same forecast that USDA had out did have this graphic, which indicated, yeah, crop receipts are going to be down a little bit. Okay, but this doesn't really paint you a picture at all of what's going on in the farm economy. They did acknowledge that receipts of corn, soybeans, wheat, crops like that, they're going to be down in 2025. But again, doesn't really illustrate what's going on in the farm economy. The graphics that were much better are the ones that we had from the National Corn Growers, and these are fantastic graphics. And these illustrate production cost over the years. The big spike in production costs that we've seen in recent years was 2021 to 2022. From 21 to 22, the cost to grow an acre of corn increased by 26% based on this data. Joe Biden was president in 2022. This was all his fault, right?
Oh, of course. Yeah.
No, that's not how this works.
I
That's how
know.
stupid you guys sound when you come on here and you comment. Everything's Donald Trump's. There's a lot of nuance and a lot of details to all of this that I don't think the new commenters understand, but most of them aren't real people. They're just robots. So
Right.
In any case, so this paints you one picture, and then this graphic also from National Corn Growers paints you a different picture. And both of them just illustrate that the input prices are a huge part of the problem here. Yeah, low commodity prices and the lack of soybean sales to China, that's part of the problem, 100% part of the problem. But the big spike in input costs and the way that in this piece here, they're blaming it on, the fertilizer companies, the seed companies. There's a lot of truth to a lot of that. I'm going to keep going here. He says, "This is the worst ag economy of my lifetime over the past 3 years," which is something we talked about at length, how this is probably the third year of what I'd call a farm economy recession. And right this minute, guys are going under, as in bankruptcy or leaving the farm. He says the solution is supposedly another bailout. Wake the hell up. That money won't go to farmers. It'll go into suppliers' pockets. Seed, chemicals, fertilizer, it's all in the hands of a few companies. You want to fix farming, start a federal investigation on those big companies. Booming quarterly earnings and stock dividends make no sense when farmers can't pinch a penny. I would agree. If corn jumps, nitrogen rises the following year. If soybeans go to $15, a bag of beans will hit $90. The monopoly problem is real. Behind closed doors, he says politicians admit monopoly influence but do nothing. We get bailouts. The money slips out of our hands and into the monopolies. Meanwhile, those same corporations lobby for us to get the bailouts. That's exactly how this works. And that's why these direct payments are Yeah, they're a band-aid for the farmer. But I think what a lot of people fail to understand is that the farmer is a mechanism for the direct payments to be funneled back to the fertilizer companies, the seed companies, the banks, the implement dealers. That's the way that this works. The farmer is simply a mechanism for these direct payments to be funneled back to the big ag companies. That's how this works. This is not the farmer getting rich off direct payments. This is the farmer barely getting by, while those companies that I mentioned, they're the ones getting rich with higher stock prices and that sort of thing. They're the ones that are profiting from all of this. Another farmer here, Bailey, what his name is, Bailey Buffalo 40, owns a grain systems company in Jonesboro. He said, if the top 4 competitors in any sector control more than 40%, abuses become likely. That's where farming is. Seed is 70 to 90% controlled. Fertilizer, about 82%. How is that sustainable? This farmer actually laid out some possible fixes. He says, 1, we need to enforce antitrust laws at the state level and push the feds to follow, impose an indefinite moratorium on mergers and acquisitions in food and ag. Says we need to control DC lobbying. Agribusiness lobbying grew from $145 million in 2019 to $177 million in 2023, more than oil or defense. Impose a 5-year cooling off period before ex-officials can work for ag corporations. And he also says diversify the grain industry. We need to grow our own edible food, not just feed and ethanol. This was a very good piece. It's very timely. It's unfortunate. I don't love reporting on this, Mackenzie. I really don't. This is a market show and always has been a market show. It just so happens that the markets are incredibly slow and there hasn't been much to discuss. So this is what we're left to discuss. And it's not fun, to be honest, for me to wake up and do this every day and just give you guys shitty news. I don't like it. I don't love it. I don't like doing it at all. It sucks, but that's where we're at.
China's absence from the soybean market is putting significant pressure on the U.S. soybean industry, a situation the American Soybean Association president describes as critical. Typically, China buys more than a quarter of U.S. soybean exports, but ongoing trade tensions have caused the nation to rely more heavily on other suppliers, such as Brazil. The impact reaches beyond farming, as agriculture contributes nearly 19% of U.S. GDP and supports over 1 million jobs in farming, manufacturing, and logistics. Farmers and industry groups are calling for swift government action to resolve trade tensions with China, warning that continued inaction will deepen the sector's financial crisis.
All right, we've gone through all of this at length recently. I'm going to tell you this. Yesterday's Soybean Disaster piece, in quotes, was printed in Fortune magazine. These articles, and there seems to be a new one every single day, they cite China's absence from the new crop U.S. soybean market, and they tie it to a poor ag economy. And they say this is the reason for the poor ag economy. It feels to me that there may be some political motivations behind some of these articles. And look at the picture here. How evil do these guys look? They're spraying this poison, wearing their masks on the bean. That's not even in the United States. I don't think. I think that there are some authors and publications guilty of some political motivation here. And I will be the very first to admit that that happens on both sides. People on the right print bullshit. People on the left print bullshit. And a lot of what you read in media is biased one way or the other. And I think you've got to understand that. The soybean problem, the tariffs, the lack of sales to China are absolutely problematic. But I feel like they're kind of going over the top with some of this.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
We've got a new contributor, Ryan Bennis from Elite Ag Insurance. He's absolutely fantastic. Had some really, really great graphics and a great explainer on the new crop insurance products. Crop insurance, and I don't know a damn thing about crop insurance, but it's changed drastically. The changes from 25 to 26 are drastic. So if you're somebody who did margin protection in the past, you're going to do it differently this year. Even the typical SEO, ECO stuff has changed a little bit. There's a lot of stuff that Ryan covered here, and he dumbed it down for me. I told him, explain it to me like I'm a 5-year-old because I don't get crop insurance. So if you don't understand the changes and how they're going to affect your farm, there's some stuff that has like sign up deadlines like at the end of this month, I think. So you've got to be aware of what's going on. The changes are substantial, and most of them I'd say are positive for the farmer, generally speaking. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We are totally independent. So our YouTube channel here, our podcast, is not sponsored by anybody other than the farmers and grain industry people that buy our stuff. So we're thrilled to have you if you're a premium subscriber. If you're not a premium subscriber, you should absolutely check that deal out.
Federal lawmakers have introduced legislation to prevent the reallocation of biofuel blending requirements. On Tuesday, a group of senators from oil producing states unveiled the Protect Consumers from Reallocation Costs Act of 2025. The bill would amend the Clean Air Act to prohibit the EPA from reallocating renewable fuel obligations from small refineries to larger ones. In August, the EPA granted 63 full small refinery exemptions, 77 partial exemptions, and denied 28 petitions. Supporters of the bill argue that reallocating obligations would drive up fuel costs and hurt local refineries. The biofuels industry, however, believes the measure rewards small refineries that avoid blending requirements and weakens the nation's renewable fuel policy.
To put this very simply, a reallocation of the SREs would be hugely detrimental to the ethanol industry. The Trump administration, as far as I'm concerned, is already skating on thin ice with regard to agriculture, and they are unlikely to make such a move because of that. I hope that they are. I hope the administration is that self-aware and aware of the situation that they don't do this, because if they do, it'll be a very, very bad look.
The U.S. House of Representatives on Monday passed the U.S. Grain Standards Reauthorization Act of 2025. The measure extends the Federal Grain Standards Act through 2030, ensuring the continuation of the nation's grain inspection and grading system. It directs USDA to prioritize technological upgrades to make grain grading more accurate, efficient, and consistent. The bill also ensures fair pricing for farmers while reinforcing foreign buyers' confidence in U.S. grain exports. The bill will now move to the Senate, where it must be approved before the end of September. A lapse in authorization could disrupt grain markets and cost the farm economy more than $70 million per day.
This sounds nice, but I just don't believe this is going to have any impact whatsoever on the export program or the balance sheets or anything like that. I mean, it's probably something that's necessary, and we figured we'd throw it in today. I just don't think this is like a market moving type event. Is this going to result in more export sales immediately? No, I don't think so.
Cattle futures posted their steepest correction since June on Tuesday. With expanded trading limits, feeder cattle futures were limit down across the board, with the exception of the back month contract. Live cattle futures also fell sharply. Although they stopped short of limit losses, the sell-off was driven in part by a steep downward revision in U.S. payrolls, which we're going to get to here in a second. The weaker outlook heightened worries about consumer strength and their ability to absorb near record high beef prices. The market was also rattled by President Trump's weekend remarks, suggesting that once his administration's policies take effect, beef prices will decline.
Yeah. So I mentioned that the Trump administration is on thin ice with ag, and like a comment like that doesn't really help. So is the cash market falling apart? I mean, what's going on here?
No, there really hasn't been any activity so far this week. And as I mentioned yesterday or Monday, we were higher, steady to higher last week. So we haven't seen a lot of change in the cash market. I find this interesting. This data that came out with the payrolls, it's backward looking. We know that we didn't add as many jobs as we had thought. And during that time, beef demand has been robust. So now all of a sudden we're thinking it's just going to fall off. I don't think it's just going to fall off a cliff all of a sudden. Yeah, it might pull back a little bit, but I don't think it's going to be absolutely terrible.
So a 5% correction is probably healthy and necessary to sustainable market. I don't know. I think it would be very premature to say that it's all over at this point. Now you go down and you take out some of these trend lines, and you could draw a million trend lines on the cattle chart because it's been trending higher for years, but maybe I'll start to be concerned. I don't know that I'm overly concerned yet.
The Bureau of Labor Statistics is expected to revise payroll figures lower by a record 911,000 jobs. The updated data indicates that average monthly job growth was roughly half the nearly 1.8 million jobs initially reported for the 12 months ending in March. Economists had anticipated a revision in the range of 400,000 to 1 million jobs. While the adjustment is historically large, it remains modest in the context of a 163 million person workforce. The weaker than expected labor data strengthens the case for the Fed to cut interest rates at its meeting next week.
My first thought when I looked at this little chart that Bloomberg had here is that something happened during COVID that broke the reporting system. And if you go back and look at the unemployment statistics or non-farm payrolls or any of that stuff, there was massive volatility and fluctuations around that COVID timeframe following the lockdowns. And I think they've just had a tough time catching up. You mentioned this is generally speaking a smaller, it's a small percentage of the labor force, but it absolutely matters to the trade. The S&P 500, of course, closed at record highs yesterday because this seemingly bad news means that the Fed is more likely to cut rates. That's the world that we live in. We talked about cattle. Outside markets this morning are mixed. The Dow's down 60 points. The S&P's up 17. Treasury's off a little bit. U.S. dollars about flat. Crude oil's at 50 cents. Have a great day, guys. We'll be back on Thursday